Madhu Khela is now joining us. Nice introduction. He's founder at MK Ventures. Madhu, good morning. Great to have you with us here on CNBC-TV18 on this, we're calling it Super Monday, Madhu. So
Yes.
it's going to be a Super Monday and hopefully, super next many months. But let's just begin by getting your thoughts on this, on the sweep that we saw the BJP sort of doing in 3 states, and Madhya Pradesh. It's significant after 18 years to come back the way they did. It's just quite something. Your initial thoughts?
So, Prashant, first of all, thank you so much for having me. I think these are the times which we have been dreaming for the last 30 years. And being bullish in India has really, really paid off. I can tell you with personal experience. So there are 3 things, Prashant. One, I think this event to an extent was not anticipated the way it came. Even none of the exit polls, none of the surveys could project this kind of win. So to this extent, I think it's a from a market perspective, it's a positive thing. Second, to my mind, it truly validates the good work which the current government has been doing for 8-9 years. And I think this kind of mandate will push the development and inclusive agenda much further, going forward. So which is a very, very good thing from a market perspective. Third, Prashant, I think with this in the bag, now 2024 election, will look much, much more certain than it has ever looked in the past that, the current government will come back. And the focus of the government over the last 10 years was, to clean up a lot of things. So next 5 years will truly, truly focus on the growth. I would go little further in saying that, while we talk about next 25 years of Amrit Kaal, so to my mind, next 5 years from a stock market perspective will be the real Amrit Kaal. Post 2024 elections. And we're starting now because, now there is a much, much more certainty. So next few years, Prashant, are really, really going to be very good for India.
Madhu, so are you saying that from here going into the elections, right? Because the outcome, nobody really doubted that, mishap in 2024, but the outcome of these state elections, as you said, has made it much more surer in that sense.
Exactly. So, it makes it much, much more certain, right? Otherwise that always the lingering thing was there. We don't know, right? Even though there is certainty, but this makes it much, much more certain.
More importantly, from here all the way into elections, should we expect something like what we saw in 2014? Rally back then started in October of 2013, but there was very different circumstances. The rupee was, if you remember, down in the dumps, and it was looking very, the mood was one of despair, which is not the situation right now. Can we have a rally going into 2024 elections, a meaningful rally?
Prashant, I don't know what you call meaningful. From my perspective, it is not a 1-2 month thing. Trust me. I think, I would like you to run through to your viewers what happens to any company once it hits a lifetime high, right? So here the whole market has hit lifetime high and it has consolidated now for a real big period of time. So then, to my mind, what is really important is what is the, let's say, worst case downside. So we had 18,600 where the market really spent a lot of time, and after it has taken out with a force and it has stayed here for a long period of time. So Prashant, I think, we are in for a couple of years of very, very good markets. Now, within this, whether you will have a 500-point rally or 200-point rally, or you will have a 200, 500-point decline, that I'm not unable to comment. But what I can clearly see is a phenomenal time for equity investors. The other point which I would like to mention, see, what is the biggest worry in the market is valuation, right? This is what is holding up people, that the valuations have become too expensive. There I would like to comment on 2 things, Prashant. One, that, yes, valuations are higher than what they have been historically so. But we should not miss a picture that the interest rates are stable, the growth is far more stable, the inflation is far more stable. So obviously, in these kind of scenarios, when there is no volatility in all of that, it will clearly lead to higher valuation. Second, very important point is that, there is a certainty of earning. So yes, if you look at it, valuation from a next 12-month perspective, they may look expensive. But there are people who are willing to have a 3-year, 4-year view. So with this certainty of earning in a lot of companies, if you take a 3-4 year view, then the valuations are not looking all that expensive.
Everyone talks about how this is a resemblance of the 2003 to 2008 phase. If this genuinely is that kind of a bull run, at what stage of that phase are we in right now? And how do investors approach it? Do you look at domestic consumption? Do you look at capital goods, the spaces that have not worked in a very long time? What's the approach now?
I would say that, as my mentor Rakesh Bhaiya used to say, it is like a buffet. You eat what you want to. Just remember, you don't end up overeating, right? So I think there are lots of good pockets from an investment perspective, but with full disclosure, and this is just, everyone who is listening to me should do his own homework before investing. But I would say the financial space looks very compelling to me from here on a risk-reward basis, because these stocks have not participated in the last 12-18 months meaningfully. So there has been a lot of consolidation while the earnings have kept up. Here, there is a lot of valuation comfort which we have. And I would go so far saying that, we have always liked public sector banks over private sector banks. But now on, the bet is the mix of, public sector and also some private sector banks which have consolidated beautifully. And I would think that, one thing which the market is really missing as of today is the FII flow. With this certainty of election results, I wouldn't be surprised that the FII flows over the next few months really gets resumed. And when that money comes in, it will only go into large liquid companies. And I think banks will be on the forefront of recipient of this kind of liquidity from the foreigners.
You're making a very good point on these PSU banking names, and you were early in on some of those names and they've done well, but now you're saying maybe you could balance it out with some private sector banks as well. Let's talk about government themes that have actually done well, but how much more can they do? With the BJP almost certainly to come back to power in 2024, this capex spend theme is going to get a booster shot. Some of the stocks have already rallied big time. How would you approach it? Because in select companies have already participated, but they've already doubled or tripled. So your take out there.
I would say, Nigel, clearly PSUs are the leader of this bull run. We did some number crunching. In the last 3 years, PSU overall market cap, which was roughly 14 lakh crores, have surpassed 45 lakh crores, right? So on the whole, there is a 30 lakh crore rupees of value creation which has happened in the PSU stocks in the last 3 years since the bottom of markets happened. So clearly there is leadership. When the whole sector has gone up 3x, you can imagine there are a lot of companies which would have gone up, 5, 7, 8, 10x as well. So I think this market is clearly led by PSU as a theme. And we have been in the forefront. We've spoken many times about this theme. Second thing I would say, Nigel, is that, with this certainty of government at the center, given that it will last for many years, even beyond 2024, clearly, I think PSU stocks will gain out of that stability at the center. And if I look at valuation, Nigel, even though stock prices have gone up, but the valuations are not expensive.
There was a point that a guest was making earlier, saying that India has two things compared to China, which I think makes the argument for India stronger. One is a very young demographic, and two is sectors like real estate are picking up in a big way, which is not the case in China, right? China is seeing a big debacle there. Do you think these two things, along with others, could lead to more money being pumped into India compared to a market like China over the next 12 to 18 months?
Sonia, at least I don't have any doubt in my mind. I'm sure you are also smiling and you have no doubt, even though you are asking this question. I would say the flows, trust my friend, trust me, it is going to surprise all of us on the upside. And we have not yet considered the debt flows, with the inclusion of JP Morgan bond index and many indices which have not yet included India on the bond side. I wouldn't be surprised if the flows really surprise the way markets have got surprised by this election victory in the last in 3 states. I wouldn't be surprised if the flow surprises the market in the similar manner over the next 2 years.
Madhu, just one last question. In terms of fresh reform impetus, this PLI schemes, etc., have been big wealth creators, right, across sectors. Would it still be focused on building out infrastructure, manufacturing, budget after budget for the last 3-4 years? That's where the big allocation has gone. So the thrust will be still that, in your assessment, briefly?
Yeah, I see no reason to deviate from there, Prashant. If you look at, in spite of whatever is being spoken, the government is really on a path where they are still in a physically very strong situation, and they are in they're going to get into a stronger position. You look at the tax collection, you look at the GST collection. So I think the capital formation model and the capital expenditure model, which is there in the budget, it is here to stay. And clearly this verdict which has come even for BJP as a party is clear validation of the good work which is happening.
All right, Madhu, we'll leave it there. It's a great conversation on an important day, as you said. Thank you so much for being with us here on CNBC-TV18.
Much for having me. Thank you so much. All the best. God.
Thank you. Well, we'll take a very quick commercial break here. That's Madhu Kela. So the bull market is here for the next many years. And, it's looking good. Phenomenal time for equity investors. It has been, and it is likely to stay that way, as Madhu put it.
Prashant Khemka is joining in. He's a founder at White Oak. So let's pose this question to him. Prashant, thanks a lot. It's really a fabulous time to be an investor, a trader, to just be in this market, right? And soak in the kind of wealth creation that has happened over the last many years and months. How are you feeling at this point in time? And do you think that this is just the start of a structured upcycle in this market?
No, thank you, Sonia, for having me here on the show today. It seems all the stars are aligning domestically as well as globally, and you enumerated several of them, including the GDP, strong GDP growth, the benign inflation. Inflation never really got to a problem stage in India of the kind that it was globally, but still good to see that. And the biggest uncertainty in investors' mind, to the degree it was uncertainty, I think prior to the day before, people possibly ascribed a low to mid-single digit probability of some electoral shock in a few months' time. I think today that's become a further fraction of that probability, and that's what you're seeing in the market reflected today. And a lot of global investors who were sharpening their pencils and wanted to be ready after the central elections, I think would prepone their decision making to maybe this month or next month, as it's around year-end time frame. So I think that factor, to the extent that it's relevant, is also positive. And as Prashant was noting, the Fed is as reflected in the longer term bond yields, which have come down sharply off of 5% to closer down to now 4%. So I think globally as well as domestically, stars are aligned for stronger economic growth and hence a stronger than expected corporate profit growth over the coming few years. And it would likely, it's not that the market's has been oblivious to all this. Market has formed up over the last November itself was a very solid month. And now with the outcome over the weekend, I think it can gain further strength from here.
So what are the best ways to play this from here? What can you buy and sit and hold, and not trying to get in and get out, etc. What looks structurally good from here?
Certainly, I think as Sonia was saying earlier, I think it's likely to be more broad-based. 70,000, 75,000. We might, before the central elections, see the sensex cross its diamond jubilee mark, if you will. So it has to be, I think, more broad-based. But we are finding, particularly given where the prospects are and where valuations are, particularly attractive at this stage is a lot of financials across the market cap segments. Financials has so far not participated as much in the rally this year, but I think they're very well poised, given all the environment, the economic environment that we talked about. They're very well poised on the valuations when you compare them within other sectors, within India, across other sectors, or when you compare them to financials across the world, particularly, comparables. You can't compare to developed market financials, which trade at a big discount for a good reason. But where you compare them to comparable companies, Indian financials are trading very attractively at this point, we believe. Consumer discretionary, several segments of consumer discretionary should do very well as we move, let's say, over the next few years from, and I'm not talking just 3-6 months, as Prashant, you said, somewhat longer term, where you can sit. I think select consumer discretionary names as the economy moves from 3.5 trillion to 5 trillion, let's say, over the next 3 to 5 years.
From the financials pack, what's your preference, Mr. Khemka? In the past, I think you were leaning more towards private sector banks, and valuation-wise, some of them are looking delicious. So how would you position yourself, between the private, public sector banks, maybe NBFCs?
Yes. No, very true. I think private sector financials always present a very fertile opportunity set for us over the years or even over the decades. I would say that's been a favorite hunting ground. And I would stretch it beyond just the banks. So private sector financials more broadly, including non-banking financial companies or the NBFCs, but including non-lending companies also, which includes insurance, but including non-balance sheet companies as well. So capital market intermediaries, which don't have a balance sheet business, but more provide service, those are some fantastic opportunities across the spectrum. As wealth grows, people, besides consumption and spending, the savings also grow and the investments also grow. And many of these companies are in pole position to capitalize on that growth very profitably. And valuations, as you mentioned, Nigel, this year have lagged, and valuations for very strong, high quality financials on a relative basis, relative to where the rest of the market is and relative to where the rest of the world is, are very compelling at this time, in our view.
Okay. Yes, but the only question is valuations for individual stocks have gotten a bit expensive, right? So where do you, or how do you generate alpha in this market? That, I think, is the big question, Prashant. What is your view on which are the pockets, which are the companies that you can invest into now that will help you generate alpha over the next couple of years?
No, very, very good point to make, Sonia. Some of the stocks have gotten stretched, and we've spoken about this before as well. I think there are pockets of stretched valuation, particularly in domestic deep cyclicals, particularly in small caps. So if I were to name them specifically, one has to be very careful. These are areas, obviously, where the macro looks very exciting. Only when macro looks very exciting do you have such a valuation stretches. So like, be it power sector, be it defense sector, anything related to railways, and there are other such domestic cyclicals. The deeper the cyclicality, the farther have the stocks gone this time around. And you have to be just cautious. I'm not saying all of them are going to be losing money going forward, but you have to be cautious because some of the biggest losses also over time would be made from these packs. And you have to be super selective in terms of the quality of the business, quality of the management, governance, balance sheet at this point in these particular segments.
Prashant, you were talking about consumer discretionary. I believe you guys like Kalamandir, Sai Silk. If you want to just talk to us about that, I mean, as a thesis, right? We had, by the way, we spoke with the management. We had the promoter and, of course, the next gen here at the time of the IPO opening. What's the thought process? I mean, just to give us a sense. Yeah.
So, Prashant, as you know, we can't talk individual stocks, but more broadly, if we talk about consumer discretionary, as you know, is a bit of a hodgepodge of a sector. The index makers, when they cannot find any particular sector that a company belongs to, they either put it in consumer or in industrials, depending on whether it faces it's a consumer-facing business or a B2B business. So consumer discretionary, when I say it broadly includes, retail, an example of which you pointed out, but also includes media, auto, and several other categories. And in each of these segments, there are very exciting opportunities in our portfolio. There are several. The team likes several retail companies. Like I would say, financials in retail, also execution is of paramount importance. So we look for companies which have had a long demonstrated track record of strong execution. And that can be across large cap, mid cap, small cap, and it can be retail. We don't have specific top-down or philosophical bent towards a particular type of retail, meaning a particular category of retail.
Got it. Prashant, thanks a lot for stopping by. Very, very big day for our markets, right? A momentous day where we have not only hit new highs for the sensex and the nifty, but it's also been a big political victory for the BJP in the assembly elections, and hence that brings more policy stability to the market, which the market always likes.